Defense stocks like HAL and Bharat Electronics surge even as Defense Acquisition Council approves purchases worth over 21,000 crore rupees.
Swiggy surges close to 5% following positive management commentary. The company tells CNBC-TV18 that they expect to hit profitability by the third quarter of FY26.
Honasa Consumers founder Varun Alag raises stake to 31.93%. The company's founders now own 35% stake in the company. Stock rises.
PNB Housing is also buzzing on the back of bullish commentary. The stock is up close to around 3% as it lays out a target of 1 lakh crore in retail loans by FY27. The management also tells CNBC-TV18 they expect the NIMs at around 3.9 to around 4% by FY27.
Wonderla rises in double digits as the company launches its QIP to raise funds at a floor price of 829 rupees per share.
Hello and welcome to Chartbusters. I'm Nigel. With me is Mangala. We have another green day and the markets are looking quite strong right now. 24,500 is where we are at. And also the broader markets, the breadth of the markets were fairly good. So we've seen a good pullback in the last few trading sessions and now, in fact, more than 1,000 points from the recent lows. Hey, Mangala.
Nigel, the financials are doing extremely well this morning. We have a bunch of these stocks, the NBFCs, banks, all of them doing extremely well. We also have a couple of these, wedding-related plays doing well. So the last few trading sessions, we did see a big move come by in a small jewelry companies. So now you have Titan, which is now moved to the high point of trade, recovered a fair bit from the lows, currently at the high point of trade, along with the financials that we spoke about. Bajaj Finance is doing well, and the key contributor to the Nifty has to be HDFC Bank, has been going from strength to strength, currently extremely well bid at the high point of trade as well. But the stock on our radar is Lumax Auto, has made a new acquisition, buying 60% stake in Green Fuels Energy Solutions alternate fuels business for about 150 odd crores. To discuss this and talk about the synergies from this acquisition, we have with us Anmol Jain, who's the managing director at the company. Thanks a lot, Anmol, for joining in. Always a pleasure speaking with you. Let's talk about this acquisition itself. What does it do to your overall business prospects? So what is the reported revenue and margins of the business that you've invested for 60% in, and what are the plans of you increasing your stake further in this company? At what milestones?
Thanks, Mangalam. Thanks, Nigel, for having me. So I've always said this, Lumax is a very diversified product portfolio company. And as a part of our inorganic growth strategy, we want to continue diversifying into new product segments. We were not present in the alternative fuel segment, and this actually leapfrogs us into that zone or that strategic focus. We're quite bullish of the whole CNG evolution in the passenger car space as well as in the CV space in India. This company already has strong inroads into passenger car makers like Maruti Suzuki as well as Tata Motors. And if you look at the industry landscape, I believe almost close to 16% of the total passenger car industry was CNG. With Maruti, leading it by 28% of their total production in CNG, and they want to take it up to 35%. So clearly a big growth which lies ahead for us, and that's the reason we bought 60%. In terms of revenue, for a full year, annualized revenue, perhaps in FY25 or 26, it should be looking at around 300 to 350 crores. Obviously, for this year, it will be much lesser given the 4 months only of the financial year. And we do expect this to be growing at anywhere between 25 to 30% CAGR over the next few years.
All right. Hi, Anmol. Good morning and good to see you in. This is Nigel on this side. It's been a while since we spoke. So we're going to hold you at that number of around 350 crores for FY26. And from there on, you're saying a 25% growth is what is possible. Give us a few more details. What kind of profitability will you be looking at for this particular business? Point number one. And what plans of buying out the remaining 40% stake?
So as of now, Nigel, let's say the margins are maintained at around 18 to 20% EBITDA. We do expect that with this CAGR of, let's say, 25 to 30%, the margins should be sustained. Given the fact that Lumax has always been a more partnership-driven company, so when we say acquisition, the promoter who has founded and built this company continues to be invested with the 40%, and we're going to co-create the value. Lumax has great relationships with the OEMs, and the technology is there already with the current entrepreneur. So jointly, we will co-create value and take this to greater heights together. So there is absolutely no plan as of now to expand or increase the stake from Lumax side.
All right, no plan to expand the stake right now. But what's interesting is, through these partnerships, what has happened is that you've increased the content per vehicle for Lumax over the years itself. So let's just talk about that. The last time you joined us, it was close to around 15,000. You expected that to grow by at least 20-odd%. I just wanted to understand, of this 15,000 content per vehicle, how much of that is, fuel agnostic? And with the addition of this, how much does the potential content per vehicle increase for you?
So Lumax Technologies as a whole, let's say, of all the joint venture subsidiaries put together, the higher end of the spectrum for us would be close to around 30 to 35,000 per vehicle on a particular platform. This obviously would include largely from IAC, which would have the cockpits and the door panels and the interiors and whatnot. Again, added to that, the certain other joint venture products which we do. So we're looking at 35,000. Let's say at a peak right now for passenger vehicles. Coming specifically to green fuel, I think right now if you look at the area which this company operates, which is largely the delivery system, what happens essentially is that from high pressure to low pressure, there is a whole delivery system which goes onto the vehicle. That delivery system by itself would be around 15,000 per vehicle, which comprises of 4 key core products. This company presently operates in 2 of those core products. So thereby about 7,000 to 8,000 per vehicle is our addressable market. But again, we will grow the wallet share with both the OEMs and expand this to other OEMs in due course. Also, we have plans to enter the other 2 core products where the company is not currently present. So addressable market for us would be anywhere between, let's say, 15,000 upwards per vehicle in the near future for this particular company.
Okay, all right. Anmol, what about for the company on the whole? What kind of growth can you deliver, say, in FY25? I think the margins have been early teens, 12% or thereabouts, with potential to improve in the second half of the year. So could you tell us revenue growth for this year with margins as well as for FY26, given that this acquisition as well will come into play?
So overall, Nigel, if you look at the numbers which we reported in H1, Lumax Technologies grew at about 20% on a top line, maintaining the EBITDA margins at about 14%. The outlook for current year would be similar. I would say 20% for the full year. We do expect, let's say, Q3 had certain hiccups, but I think Q4 should be smooth sailing, specifically in the two-wheelers and pass cars. So I would say anywhere around 18 to 20% for the full year with a sustained EBITDA margin is what my guidance would be for Lumax Technologies as a whole. Going forward, I think we continue to believe that Lumax Technologies will offer a much better return, probably grow 50% more than that of the industry. So anywhere between 15 to 20% should be the total consolidated CAGR of Lumax Tech over the next few years. And from an EBITDA margins, clearly our endeavor would be to expand margins further. But I would say on a safer side, we will be able to at least maintain it in FY26.
All right, take that point. Just final question before we let you go. And a quick one. You said that you have plans to enter the other 2 products in this space beyond the 2 that this acquired company gives you as well. So can we hear of any more JVs, at least in the next 1 quarter or 2? Or what are the timelines of you entering that other part of your addressable market here?
So those 2 product lines would be addressed by the same company, Lumax Green Fuel. We already have certain technical partners with whom we will, get these products into the market. So as of now, there are no new JVs on the anvil. But again, given a midterm perspective, we're always looking out for, new ways to grow both inorganic and organically.
Got that. The street likes what you said. The stock was holding up in the green, but as you were talking about growth prospects for this business itself, increasing total addressable market, at the same time increasing content per vehicle, the stock has moved to the high point of trade. Wish you good luck on the execution of this deal itself. With that, we move forward. Let's get you an idea of a profit coming in from our colleagues at Money Control Pro. Anant Chaudhary joins in today.
We like Shivalik Bimetal Products Limited, a manufacturer of bimetal parts and shunt resistors used in industries like switchgears, smart meters, electrical vehicles, and electronic devices. With an 85 to 90% market share, it is India's largest supplier of thermostatic bimetal and a global leader in ultra-low ohmic shunt resistors. It is the only company domestically to produce shunts using electronic beam welding technology. Entry barriers are high for a new entrant in this industry due to lengthy product approval cycle of 4 to 5 years. The company is the only Indian manufacturer with approved shunt resistors for smart meters, positioning it well to benefit from government Smart Meter National Program, which aims to replace 250 million conventional meters by 2026. The rising adoption of energy storage devices, including solar energy, which requires low ohmic shunt resistors, with penetration of EV leads to boosting demand for battery management systems. Despite facing headwinds from a slowdown in the North American automotive market over the past few quarters and a decline in realization due to passing on lower raw material costs, domestic demand remains strong. Margins came down due to lower revenue from high margins shunt business. However, management expect demand to revive from Q4 onwards, and we believe stock trades at very reasonable valuation of 29 times on FY26 earnings.
All right, with that, we'll take a short break, come back. On the other side, we'll get you more stock-specific action, perhaps get in a conversation as well with the management of Monte Carlo. Sandeep Jain, who's the executive director, joins in.
Welcome back. Well, Monte Carlo, the stock has been in focus of late. We have winters that are due, and sometimes that has a bit of a ripple impact on the stock price. But to understand how's business shaping up, we're joined by Mr. Sandeep Jain, the executive director at the company. Hi, Mr. Jain. Good morning and good to see you win. Well, in the last few days, the stock price is quite excited. It appears winter is coming and people believe that there's going to be a lot of demand for your product. So tell us, how has demand been on ground? Are you noticing a better than expected demand? Point number one. And what about the guidance for the year? You were guiding for single-digit revenue growth with margin improvement of around 150-200 basis points. Is it still on the cards for this fiscal in comparison to last? Sandeep? Oopsie. All right. Let's try.
I think we've got him on a wrong line, I guess. So we'll just try and, get him back once again. But if you just look at the stock over the last few trading sessions, it's up around 15% at a near record high, if not, fresh record high itself for Monte Carlo. What's very interesting, however, Nigel, is that, while every once in a while we do feel cold here in Mumbai, the western part of the country, yesterday we had the IMD chief join us here on, our channel and said that we might actually have the hottest winter in this year itself. So if that were to happen, then what happens to their business is something that we'll most definitely keep an eye out on. Manisha was speaking to the, IMD person who did say that November has actually been hotter than what we've seen in the last 5 Novembers. And also, December is likely to be much hotter as well. We'll just try and repatch that connection with Mr. Sandeep Jain.
I'll tell you what.
Okay, he's ready. Let's go.
All right. Hi, Sandeep. I think we have got you back on the line right now, so that's good to hear. We are talking about a stock price being quite excited, and that's why it's moved big time from around 800 to around 960. But tell us, how is business on ground? Point number one. And what about your guidance for the year? You were guiding for single-digit revenue growth with margin improvement of 200 basis points. Is that still on?
Yeah, good morning, Nigel. So, you are right that we have guided for a flat revenue for this financial year, but seems like this year has begun well in as far as winter is concerned. It is basically October, November have been good for us. So I think that we still have 1 month left, but as far as this quarter is concerned, we see a positive growth coming out of this quarter as compared to last financial year. And definitely, as you rightly said, there would be improvement in margins as well.
All right, because at the halfway mark, the margin improvement hadn't yet come about. So the second half of the year, the margins will have to be much better. So in comparison to FY24, you're saying margins will improve by around 200 basis points. Is that doable?
Yeah, I can't say it's 200 basis points, but there would be definitely improvement in the margins because we don't give a quarterly guidance, we give annual guidance. So on annual basis, you will see that once we end this year, we will have a definitely improvement in the margins.
Right. On revenue itself, the first half, there has been a mild decline. October, November, you said have been good for you. Could you give us a sense of what October, November growth has been this year over last year's October and November?
There was single-digit growth in revenues in October and November, and December is also very important for us. So overall, we think that third quarter basically contributes around 55% of the revenues. So we're very hopeful that we'll have a good growth coming up, at least single-digit growth coming up in this quarter, and that will compensate the decline which happened in first half of this year.
So October and November in single digits. Can you tell us mid-single digits, high single digits, low single digits?
Because we don't have a data from across India, because we only have EBO's data, so it's very difficult to say. But
so how much has EBO's grown?
EBO's growth around low single digit.
Okay, all right. Sandeep, one factor that you have worked on is getting rid of the seasonal aspect. I recall earlier woolens was bulk of your sales, and then gradually I've been getting cottons in as well. And I've seen a couple of t-shirts, in fact, that have been made from your stable itself. So you have de-risked the business to some extent. Could you give us a few more details then? Quick commerce channel, how much of your sales come in via this channel? I believe you have tied up with various companies, Blinkit, Swiggy, Zepto as well. So how is that shaping up?
Yeah, so fortunately, I think they're working well. We have tied up with Blinkit also, and also with the Minutes. So the sales have started, but it's too early to comment about the overall sales which will happen in this financial year. But earlier response, like it started from last 2 months only, and we have been selling good number of pieces every day. So it has just picked up. And at the same time, as far as online business is concerned, I think we should be doing around 9 to 10% of the revenues in this financial year from online sales.
9 to 10%, is that?
Yeah.
And how much of that will come from QCom?
QCom is a very small business right now because it has just started. So I can't quantify as of now.
Right. What about, home textiles? That has been one of those strong growth drivers for you going forward as well. That is a business that has been growing in double digits, a lot harder, a lot higher on a smaller base than all the other parts of your business. What does it stand at in terms of contribution right now, and what is that growth rate likely to be?
Yeah, I think because you rightly said that it's growing double digit as compared to single digit for overall company. So definitely contribution from home textile would be more in this financial year as compared to last financial year. And we would see a double digit growth going forward also in the home textile segment, even in this year.
How much does it currently contribute?
So I think this year we should end around 15 to 16% of the revenues in home textiles of overall sales.
Okay, all right. Thanks a lot, Sandeep, for joining in. All the best. You seem to be indicating that December, that the third quarter was better than what you've seen in the past. And for the year, you're optimistic about some kind of revenue growth in this fiscal versus the last. And you're still sticking to that number that there will be some margin improvement in this fiscal as well. Thanks a lot for joining in. The stock is still up close to around 4.5%. But the reason we invited the management was in the last few days, the stock has moved up more than 10%. You pull up a week-to-date chart, it'll tell you a clearer story. For the time being, slip into a short break, come back, continue to focus on markets, stock-specific action as well.
Welcome back. The markets continue to do well, even as, the indices on the top of your head. We have the Nifty bank outperforming with a gain of almost 0.9%. The small cap index is the one that really is, doing a lot better than the mid cap index itself, up around 0.6%. And we've seen a bunch of these cash stocks surge just as we speak, double-digit gains coming in for a bunch of them, including the likes of Yatra and, Bharat Dynamics, which is now up 6%. Kaya has done well. HEG itself is up around 11.5%. We take your leave on this edition of Chartbusters. Stay tuned. Trading Hour comes up next.